What if I told you that right now you might be handing the IRS an extra $5 zeros, $10 zeros, maybe even more, and not because you're breaking any rules, but because you simply don't know the ones that could save you? In 2025, the difference between a struggling small business and a thriving one isn't always more sales. Sometimes it's knowing the tax deductions your competitors are using while you're leaving them untouched. Today, I'm going to reveal 5 of the biggest small business tax deductions most owners completely overlook. And if you miss even one of them this year, you might write a check to the government with your signature and a smile. Let's make sure that never happens again. If you run a small business, chances are you're working harder than anyone realizes. You're wearing a dozen hats, making decisions every day that could change the future of your business. And yet, there's one thing that far too many business owners overlook, not because they don't care, but because they don't even realize it's happening. I'm talking about money, not the money you're earning, but the money you're accidentally giving away. And no, I'm not talking about overpaying for supplies or forgetting to send invoices. I'm talking about taxes. Yes, the unavoidable, often frustrating, absolutely necessary taxes. The thing about taxes is that in business you don't just pay what the government tells you to pay. You pay what you fail to understand you could legally save. And in 2025, the rules around deductions are more important than ever. Why? Because inflation has eaten away at margins for so many small businesses. And even a few $1,000s in deductions can make the difference between thriving and just barely scraping by. What shocks me most is that the IRS literally publishes the rules, plain as day, but business owners still miss them, partly because the tax code is written in a way that feels like it was designed to be confusing. In fact, according to a National Federation of Independent Business survey, over 65% of small business owners admit they don't fully understand all the deductions available to them. Think about that. More than half of business owners are possibly leaving money on the table year after year. And we're not talking about a couple of $100 here. We're talking thousands. I once worked with a cafe owner who was struggling with cash flow. She thought she had already claimed everything she could for deductions. Turns out she hadn't claimed a single cent for her home office, which she used for bookkeeping and supply ordering. That one oversight cost her nearly $3,000 in unnecessary taxes the year before. $3,000 money that could have paid for a month's rent, a new espresso machine, or even a part-time employee during the holiday rush. And here's the thing, she's not an exception, she's the rule. Now, I'm not saying you need to memorize the entire tax code. Nobody has time for that, and even accountants don't have every detail memorized. But I am saying you need to understand the major areas where the IRS is practically handing you the opportunity to keep more of your money legally, ethically, and smartly. And I promise you, these aren't shady loopholes or risky moves. They're legitimate deductions that every small business owner should know about. Yet most don't, and that's where the first one comes in. Every time I bring this up, I get the same response. Wait, really? I thought that was only for freelancers or work from home people. No. The home office deduction is one of the most misunderstood yet powerful tools for reducing your tax bill. If you have a space in your home that's used exclusively for your business, whether it's an actual office, a spare bedroom you've converted, or even a section of your basement, that space can be deducted. Now, the IRS doesn't let you deduct your whole rent or mortgage just because you sometimes check email from your couch. It has to be a dedicated area, and the deduction is based on the percentage of your home's total square footage that it takes up. But here's what people miss. This deduction doesn't just cover the square footage. It also covers a percentage of your utilities, your internet, your homeowner's insurance, and even repairs that affect the whole home. In 2025, the simplified home office deduction rate is $5 per square foot, up to 300 square feet. That means if your office is 200 square feet, you can deduct $1,000 right off the top. And that's the simplified method. Many people save even more by using the actual expense method, which calculates the real percentage of costs. I've seen clients double their savings that way. Now, let's talk about something most people actually enjoy: travel. Here's the funny thing about travel deductions. People either abuse them to the point of breaking the law, or they don't claim them at all because they're scared they'll get audited. But the truth is, the IRS is fine with travel deductions, as long as they are genuinely for business. That means if you fly to another city to meet a client, attend a conference, or visit a supplier, your airfare, hotel, taxis, and even half your meals can be deducted. And here's a little known fact. If you extend your trip for personal time, you can still deduct the business portion. Let's say you attend a 3-day conference in Miami and decide to stay 2 extra days for the beach. Your airfare is still 100% deductible because the primary purpose of the trip was business. The key is documentation. Save your receipts, keep your itinerary, and make sure there's a clear business reason. According to the U.S. Travel Association, 38% of small business owners travel at least 4 times a year for work, yet less than half of them claim all their travel expenses. That's thousands of dollars being ignored, and speaking of expenses people ignore, equipment. The IRS allows you to deduct the cost of business-related equipment, whether that's a new laptop, a printer, a camera, or even machinery for your business. In fact, under Section 179 in 2025, you can deduct the full purchase price of qualifying equipment in the year you buy it, instead of depreciating it over several years. For small businesses, that's huge. Imagine you buy $50,000 worth of new computers for your office. Instead of spreading that deduction over 5 years, you can take the entire $50,000 this year, lowering your taxable income immediately. I once had a client who ran a small design studio. She upgraded her software, computers, and even her office chairs 1 year. Because she knew about Section 179, she deducted all $14,000 in one go. That deduction alone reduced her tax bill by over $3,500. And here's the best part. It's not just about big purchases. Even small tools and supplies add up. Pens, notebooks, USB drives. If they're used for your business, they're deductible. Most people throw away these receipts thinking they're too small to matter, but think about it. Spend $20 a week on office supplies, and that's over $1,000 a year. That's a dinner for 2 in Paris, or at least a really nice steak dinner at home. Another big one: people overlook professional services. This one always surprises me. If you pay an accountant, a lawyer, a consultant, a bookkeeper, or yes, even an auditor, those fees are fully deductible. You are literally paying for services to help your business, and the IRS says, sure, deduct it. And yet, business owners either don't know it's deductible or they forget to track it. I've seen entrepreneurs pay $2,000 to a tax preparer and not deduct it on their taxes. That's like ordering a pizza, paying for it, and then walking away without taking the box. And here's where it gets even better. Those services don't have to be local. If you hire a virtual assistant overseas or a freelance designer from another state, their fees are deductible too. In our increasingly digital economy, that's a game changer. And the last one I want to mention is something every business needs, but not everyone thinks of: marketing and advertising. Whether you spend money on social media ads, printed flyers, radio spots, or even a giant inflatable gorilla outside your shop, it's deductible. In 2025, small businesses in the U.S. are projected to spend over $35 billion on digital advertising alone. And yet, many of them fail to claim those costs on their taxes. Even sponsorships, like if you sponsor a local sports team and get your logo on their jerseys, can be deductible. Here's where it gets clever. If you're also creating content for your business, like YouTube videos or podcasts, the equipment, the editing software, and even the ad spend to promote them can be written off. So if you're watching this video right now and you're a business owner, think about it. How many of these have you actually been claiming? Because if you're missing even one, you could be losing thousands. I know taxes aren't the most exciting part of running a business. Nobody starts a bakery because they can't wait to file quarterly returns. But every dollar you save on taxes is a dollar you can reinvest into your business, hire more staff, improve your products, or just give yourself the financial breathing room to sleep a little better at night. And here's the truth, your competitors might already be doing this. If they're keeping more money in their business and you're giving it away unnecessarily over time, they're going to have a serious advantage. I'm not telling you to become a tax expert overnight. I'm telling you to pay attention, to keep receipts, to ask questions, to work with a professional who understands your industry, and most importantly, to never assume you're already claiming everything. The most dangerous words in business are, "I already know that." Because in my experience, the business owners who think they already know everything about deductions are usually the ones missing the most. In 2025, with the economy still unpredictable, your margins matter more than ever. If you can save $5,000, $10,000, $0, or even more without working a single extra hour or selling a single extra unit, why wouldn't you? That's the beauty of deductions. They don't require you to increase sales or find new customers. They simply let you keep more of what you've already earned. So here's my challenge to you. Before the end of this week, review your last year of expenses. Look for the home office, the travel, the equipment, the services, the marketing. If you're missing any of them, make a plan to track and claim them this year, because the IRS might not call you to say, "Hey, you forgot to deduct this." But they'll happily keep your money if you offer it up, and you didn't work this hard to give it away for free. Remember, every dollar you save on taxes is a dollar that stays in your business, a dollar that can help you hire that extra employee, invest in better equipment, or finally take a breath without worrying about cash flow. The 5 deductions I shared today aren't just tips. They're powerful tools to keep more of what you've earned. Don't leave money on the table because of overlooked details or assumptions. Take control, track your expenses, ask questions, and when in doubt, get professional advice. Your business and your wallet will thank you. And if you want to take your savings even further, check out my video on the best business credit cards for small businesses in 2025. Together, these strategies can transform your financial game. Thanks for watching, and here's to your success.